Alright, welcome to this new video. In this video, we're going to talk about inversion for value gaps. And before we can dive in what inversion for value gaps are, you need to understand what a fair value gap is. I already created a dedicated video about this. I will link it in the top right corner right now. But to summarize, it's a 3 candlestick pattern where the low, in this example, is a bearish value gap, where the low of the first candle and the high of the third candle don't overlap with each other. So here we have the low of this candle as the high of the third candle, candle 1, candle 2, candle 3, and this low and this high is not overlapping, so we have a fair value gap. I like to mark it out with a yellow box. This is your fair value gap. An inversion fair value gap is a fair value gap that is violated and then gets retested on the other side. So what I mean with this, we're currently looking at a bearish fair value gap, or a SIBI, and what a SIBI needs to do is price trace to it, respect the consequent encroachment or the 50% of the value gap, and then trade lower. But what if price doesn't do it? What if price doesn't respect it, closes above the value gap? Then we can look at, okay, could we use this value gap as an inversion value gap? So it gets a retest on the other side. Price can come back to the inversion value gap, respecting what is respecting the consequent encroachment, and then trade higher. And this sample is the DXY from March, and we'll take a look at how this will play out in real time. Price trades inside the value gap. Now it's respecting, so this is still a SIBI. We can still use it as a SIBI, but now we see a close above the value gap. So now we know, okay, this is not going to be respected. So we can look, okay, probably we use this as an inversion for value gap. And what we want to see then is price. All prices go higher. Most of the time, price will retrace back into the value gap, to the inversion value gap, respecting the consequent encroachment or 50%, and then trade higher. And you see what price does. Price disrespects it, come back into the inversion for value gap, and then trades higher. And a quick side note, how do you know what the consequent encroachment is? Or is that is the 50% of the value gap. So you can draw a fib from the top to the bottom, and your 50% is your consequent encroachment. So price can trade into it, even below the consequent encroachment, but the body should respect the 50% of the value gap or the inversion value gap for it to be valid. Now let's go over some examples on the chart. We'll start on the 1 hour and we'll go to a lower time frame with every example. So here we're on the 1 hour on NASDAQ on 21st March, and we created a BISI right here. The high of this candle and the low of the third candle do not overlap, so we have a value gap. So we now have a BISI. And as it looks like, it gets respected. We're at the next candle, still respected because the bodies are closing above the 50% of the consequent encroachment. And after that, you see price disrespecting the fair value gap and now trading lower. Now it's the question. We run buy stops right here, and now we're displacing downwards. And now see we can use this BISI that's now inviolated. We can use it as an inversion to trade lower. And when we take the trade, when can we enter? And if you've seen the premium discount video, if you take your gun box or your fib from swing low to swing high, and take a value gap in the discount of the range, this will be our first point of interest. So we can take a trade as target right here. Let's see what price does. The price leaves a value gap right here as well, but we are focused on only using the inversion as a confluence. So what I will do is set the limit, price above the consequent encroachment, tell the order block. And if you just want to target at 1 to 3, we can do it like this. And let's see what price does. Comes back to the inversion. What's important here, price should respect the 50% of the inversion, and the bodies are doing that. And then price trades to the take profit. Now let's take a look at an example on the 50-minute. Please pause the video and see what you're looking at. What do you see? First of all, we see sales liquidity resting below here, and we just took out this liquidity. But as you can see, we trade upwards. So with displacement, leaving a fair value gap, and now we're going to take a look. Okay, this is a BISI, a bullish fair value gap, and in theory, this fair value gap should be respected to trade higher. When you're trading this inside the anti-London kill zone, your eye should immediately go towards here, like, hey, do you respect these lows? I won't, because there's no liquidity being taken out, and here it is. So let the chart play out, and let's see what role this inversion can play inside your setups. So what we want to see when we are using an inversion is this fair value gap not being respected and then be used to trade lower. Now, price violated the fair value gap, so now we can use this to frame our trade around to the downside. And we want the 50% to be respected. Consequent encroachment, and you see here price trading in, so this will be your entry. You knew there's already liquidity being taken out. We have this clear target, these lows, also this low. You can place your stop loss at the top of the inverse fair value gap, or above the opposing candle, or above this high, whatever your risk is. For example, if you want to go for 1 to 2, placed here. I want to go for 1 to 3. So I'll place my stop loss right here, and then see what price does. And it violates with speed these lows, because again, these are failure swings. This is liquidity, sell side liquidity pool. And do you see how nice the bodies are respecting the consequent encroachment of your value gap? So if you are seeing this in real time, and you see, okay, the bodies are respecting it, we already took out liquidity, you know, okay, this could be a very valid short setup. Now let's take a look at a 5-minute example. So what do you see? These are value gaps. So we have here a nice SIBI supported with an order block. So what we would expect usually is price trades towards this. This will be a high probability setup when you have your OTE entry. You have inside the OTE entry per value gap with an order block. So most traders would take it. But you should always look, how do the candles close inside the value gap? So let's make sure I'll run. Because here we are inside this SIBI. And this candle, it closed exactly at the 50% of the value gap. But you should look at the next candle. And this candle closed above the 50%. So you know, okay, this SIBI is invalid. But now is the question, can we use this for a setup towards the other side, to use as an inversion? And let's see how price plays out right here. See, price comes back. They don't respect the fair value gap. They come back into the bottom inversion fair value gap to then trade higher. So you see how these inversion fair value gaps, how they are used. So if you have 2 of them, always be certain to have your stop loss below all of them. So in this example, I would take an entry right here, and then my stop loss will be or below here. Do we have targets? This with clear swing high right here, this one. And if you want to target 1 to 3, this will be your setup. And if you miss this entry, you can always look, okay, can we enter somewhere else? What do you see right here? We have this breaker right here, this bullish breaker. We have this fair value gap, and here you have another entry. So you can just take on top of the breaker, stop loss below, same take profit, and you have a clear 1 to 3 to play with. For this last example, I want to blend some other concepts inside the things we are discussing today about inversions. That's a concept I need to give credit towards MMXM Trader. It's about trading from external liquidity, so old highs and lows, towards imbalances, internal range liquidity. Because price only does those 2 things, from external to internal or from internal to external. If we take a look at this example, we just took out these lows, so external. Where does price trades to next? Pause your chart. What do you see? Where's your next big internal liquidity point? Is the big imbalance right here. So this means after price takes out this liquidity, external liquidity, on the 1 minute and 5 minute, you could take the trade from here towards this fair value gap. If you're trading on a higher time frame, this should be your obvious strong liquidity. And that's the question. Usually with a SIBI, price should trade from the SIBI toward the lows, but it doesn't. It gets disrespected. So now we know, okay, let's draw out our consequent encroachment, and price should hold the 50% of it. As you can see, it does. And now the question, we are at the Friday. So we know if we see this on a Friday, we know next week drawn liquidity will be this fair value gap. And if we use the time frame alignment, also taught by the MXN trader, we can go to the 15-minute for entries. And it can be on Monday or Tuesday or Wednesday. So now we are from the 4-hour to the 15-minute. And we have at the bottom here our 4-hour inversion fair value gap outlined. And now on the 15-minute, we're going to frame a trade around this. So we have this fair value gap right here. And now let's see what price gives us. We are in the Tuesday London. Monday consolidated. There were no entries there. And you see how price trades beautifully towards this internal range liquidity pool. So what it did, it took out Monday low and then traded upwards towards the fair value gap. To reward you to sticking to the end of this video, I want to give you something really cool I discovered while recording this video. It's an indicator. It's from Luke's Algo. His indicators are amazing, and it's the inversion value gap indicator. So you go to indicators, then you just go to inversion fair value gaps, and this is the one. And what it does the work for you. So for example here, the example we just discussed for our fair value gap, inversion value gap right here, but also later in March, this fair value gap get disrespected, retested, and you had some really nice entries into it. And you can use it if you're not sure, is it an inversion value gap or not? Just put on this indicator and it should help you out a lot. Thank you for watching this video. If you like this video, please like, subscribe, check out the other 2024 mentorship videos, and I'll see you in the next one.